When I'm looking at the landscape of the market, which we think is a complex adaptive system, in other words, it's a fancy way of saying there's a lot more going on in this big market than people expect. And look at the economy alone, 17 trillion. Market's even bigger than that. You know, it's like 130, 140% of GDP. There's a lot going on there. So I simplify it and was thinking about the market like a play. And every cycle has a play. This cycle, the Federal Reserve has played the starring role. So, on a short term basis, I'm obviously watching the Fed. And the big question there is with the labor market tightening, especially in the U.S., signs of reflation, is the Fed going to get behind what they call the curve? In other words, are interest rates going to start galloping ahead of what the Fed's guidance is? And I think the probability, quite frankly, of that is rising. That's one thing, and I'm looking at that, so definitely a reflationary path. The second piece is this longer term play, and it's a variant perception of ours, is going back to the economist Schumpeter. You think about innovation and almost what we call deflationary growth, but it's the advance of human knowledge and sort of exponential improvement in things. And we're seeing that the shale energy play is digital improvement and innovation. What's going on in healthcare, that is literally about genomics and the declining costs of all the analysis we do there. And just the march of digital. We have tech's going through one of these classic seismic shifts with cloud and big data. All these things are driving growth, and they're driving deflationary growth. And it doesn't get talked about because it's hard to model, but it's a real engine and a real driver. And if I was going to think about where interest rates are, where the market is, it's the one view or perspective that sort of reconciles everything and puts it into a package that makes sense, yet it never gets talked about.